Hello everyone, newborn investor here and welcome to another video. This week I'm back with another short video on SOFI. I first recommended SOFI back in March and the stock has been on a roller coaster ride since then. Last week I added another 200 shares to my position, bringing the total position size to 1200 shares. SOFI stock price was under attack post-merger with stock price dropping almost 19% in July alone. So what caused the stock price to drop and why did I add to my position in spite of the drop? In today's video, we're gonna talk about it and many more, so make sure to stick around as we're starting right now. The fintech market is highly competitive and SOFI is one among the many players trying to make its mark in the banking sector. In my previous two videos, I've shared my reasonings on why I'm bullish on SOFI for the long term. So if you have not watched it, check out the link to those videos in the description below. In spite of all the positive news and successful merger, SOFI stock dropped almost 19% last month without any major catalyst. So what went wrong? We will get to it in a minute, but before that, if you like the video and find it valuable, please make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. Alright, let's move on. If you are an investor that does your due diligence before investing, you need not be worried about short-term market movements. In the case of SOFI, at least for the moment, I don't see any big red flags. However, the stock has been experiencing a huge sell-off post-merger and I think it can be attributed to the company's unique lockup conditions. Usually, for new public companies, the lockup period expires between 90 to 180 days from the IPO. During this window, insiders and early investors are prevented from selling the stock in the open market. But SOFI's SPAC agreement with early investors contained two unique conditions that would trigger an early lockup expiration. Firstly, a total of 33% of insider shares would become eligible if the stock traded above $12.50 for 20 days out of a 30-day period. Secondly, an additional 50% of insider shares would become eligible for sale if the stock traded above $15 for 20 out of 30 trading days. In the case of SOFI, when the merger was announced, the stock price immediately broke those levels and stayed above it for the required days, making the stock eligible for early lockup expiration. As a result, 83% of insider shares was open to sell off, and I strongly believe that the dip on SOFI that we saw last month was primarily because of early investors booking profits. So what's my take on SOFI? I currently own around 1200 shares in my long-term taxable account with a cost basis of $17.08. I hold an additional 175 shares in my Roth account at a cost basis of $17.36. To me, nothing has changed since I initiated my position on SOFI. Additionally, SOFI has already applied for a bank charter and has recently acquired Golden Pacific Bancorp for $22.3 million. I think the acquisition would take SOFI one step closer towards a national bank charter. Having a bank charter would allow SOFI to accept deposits and make more profitable loans using its member deposits. It would also eliminate the need to rely on third-party banks. For all these reasons combined, I'm bullish on SOFI for the long term and will continue to hold my position. Now, I would love to hear from you guys. What do you think about the long-term prospects of SOFI? Leave a comment below with your answer and I'll be sure to follow up with you. Also, if you liked this video and found it valuable, please make sure to hit the like and subscribe button. I really appreciate your support. So until you hear from me again, stay safe and thanks for watching. Bye.